Welcome to the Explainer. Today, we're basically detectives. We're going to solve a mystery, a massive crypto flash crash that honestly seemed to come out of absolutely nowhere.
All right, so let's get right into this puzzle. Picture this. It's a night where everything is looking up. The market is waiting for some really good economic news. News that should have sent prices through the roof. But then, the exact opposite happens. The whole crypto market just tanks. It takes a complete nosedive. So what on earth went wrong?
So here's the timeline of how it all played out. At around 8 p.m., the mood is optimistic, right? Traders are opening up long positions, which is just a fancy way of saying their betting prices are going to go up. By 8:30, they're all set, just waiting for that U.S. jobs report to come out and prove them right. But then, bam, 10 p.m. hits, and the floor just drops out. Everything falls off a cliff.
Yeah, that kind of super sharp vertical drop, that's what traders call a waterfall. And believe me, it left everyone scrambling, trying to figure out what just happened. So our investigation, it's going to start with the most obvious clue. And our prime suspect? It's that U.S. non-farm payroll report. You know, the very same piece of data everyone was so excited about. But when it finally dropped, the numbers, they weren't just bad. They were so weirdly, wildly off that it just shattered everyone's confidence.
And look, the reason this was such a shock was the size of the miss. I mean, check this out. The market was expecting, 75,000 new jobs? The actual number that came out? Just 22,000. That is a massive 53,000 job difference. The number was so wrong, so far off the mark, that people immediately thought, no way, this has to be a mistake.
And guess what? It was. Almost right away, a White House economic advisor comes out and says, yep, this data will be corrected. Now, you'd think that would calm people down, right? Nope. It was like throwing gasoline on a fire. Admitting the error was that huge just sent the market into total chaos. But here's the thing. Was that jobs report really the lone gunman? Not even close. A bad data point might cause a little dip, sure. But a crash this big? No. It takes a lot more than that. It turns out our main suspect had help. You see, that messed up jobs report, that was just the spark. The real explosion came from something our source calls the compounding effect, or Xiaoying. Think of it like a perfect storm. A bunch of bad things all happening at the exact same time, making the final result way, way worse. So who were these accomplices? Well, first off, for days before the crash, a ton of money was already quietly leaving major U.S. stock ETFs, so the market was already a bit weak. Second, that initial dip set off a chain reaction, a huge cascade of automated liquidations, basically forced selling for Ethereum, all clustered around that $4,480 price point. And third, and this one's a big one, a major insider, the Ethereum Foundation itself, was selling off its own coin. Okay, let's pause on that last point for a second. The Ethereum Foundation selling its own ETH? That's really interesting, because it's not just some random market noise. It actually points to a much deeper, more strategic story happening inside Ethereum. I mean, it sounds crazy, doesn't it? Why would the one group that's supposed to champion Ethereum be dumping it on the market? Well, according to our source, this is all part of a very deliberate long-term plan. A plan to fix one of Ethereum's biggest problems. And this right here really gets to the heart of it. Think about Bitcoin. It's totally decentralized. It has a fixed supply, hard-coded, can't be changed. But Ethereum, it's kind of centralized. You've got the Ethereum Foundation, this single entity with a ton of influence, and its supply can change. And that's been a drag on its price. Honestly, if it had the same level of trust as Bitcoin, it'd probably be trading closer to $10,000 right now.
So here's the bottom line. For Ethereum to become what it wants to be, the fundamental layer for the entire crypto world, it has to get rid of that central point of control. So the foundation selling off its stash, yeah, it hurts the price in the short term. It's short-term pain for long-term gain. They're making the network stronger and more decentralized, which is what will unlock its real value down the road. Okay, so case closed on the flash crash mystery. Now let's look ahead. What are the experts in our source material saying is next for the market, now that the dust has started to settle?
Even with all that craziness, the long-term picture for some key players looks really strong. Take Solana, for example. Analysts are looking at a price target of around $260.
And what about Ethereum? Well, even with the foundation selling, the long-term forecast is still aiming for somewhere between $5,100 and $5,300. That's a pretty big jump past its old records.
And then there's the king, Bitcoin. The projection here is even wilder. We're talking about a target in the $120,000 range. So what this really tells us is that one chaotic night didn't kill the bull run, not by a long shot. And the bounce back is expected to happen fast. I mean, the immediate prediction was for Bitcoin to be back over 1125 by the very next morning, Ethereum back over 4300, Solana over 207, and for the rest of the month, the numbers just go up from there.
Okay, so all this up and down, it can be pretty stressful, right? It's nerve-wracking. So what's the big takeaway for a regular investor like you or me? Well, the source material has some really clear advice on this. Here's the single biggest mistake, the most painful one that regular investors make. They get scared and sell too early. They either panic sell when things dip, or they take a tiny bit of profit and get out. And then they have to just sit and watch as the market explodes upwards without them. They miss the real money, those huge, life-changing moves. And the experts we're drawing from, they don't mince words. They're blunt. Trying to make a quick buck on these little day-to-day swings, in crypto, you just can't make money that way. It's a loser's game. The real fortunes are made by holding on and riding the big, powerful trends that last for weeks or even months. And that really brings us to the final question, doesn't it? An event like this flash crash, it creates a ton of noise, a lot of fear. But once you actually solve the detective story, you see the bad data, the perfect storm of factors, the long-term strategy behind the scenes, you can see it for what it really is. It's just short-term noise inside a much bigger long-term story. So the real question you have to ask yourself is, which one are you focused on?